Welcome. Subprime is back. Wow. My name's Karen Newton. I'm a business and wealth strategist. And I watch the markets, I watch investment cycles, and I take a look at what is happening in the economy, how that is likely to affect us, and what we can do to prepare for what's coming. And the big headline, what I've been monitoring lately is subprime. And yeah, it's back in the headlines again. However, it's not mortgages this time. It's personal debt and commercial real estate loans. So let's talk about what subprime was back in 2007. So subprime was when the US government, the US lenders lent a whole heap of loans that were to people who really couldn't afford the loans. They were then packaged together and sold on as investments that were asset-backed investments. It turned out that we had lots of things going on in the economy at the time. There was a lot of mortgages that were in fixed rate that were coming out, and people couldn't afford the higher interest rates. And then you also had things like Hurricane Katrina, which destroyed a lot of homes. It contributed to defaults on property loans because houses weren't insured. I can't afford to pay for any work on the house. So there were all these delinquencies. And we started to see these so-called asset-backed securities didn't have the assets, and the whole system imploded, and we ended up with the credit crunch. Well, fast forward to 2025, and what we have today is actually personal credit. That is the new subprime. We have car loans, credit cards, buy now, pay later. They are also being packaged into asset-backed securities and put out there. And the delinquencies are starting, and they're going to get a little bit higher. Add to which we have what is called the CRE wall, credit wall. And what that's relating to is commercial real estate. There's a lot of lending for commercial real estate that is now coming up for refinancing. It's due through 2025 to 2027. And when those loans were initially taken out, interest rates were very low. Today, those interest rates are higher. Many of the investors who are in commercial real estate cannot afford the new interest rates. So we are likely to see a repeat of the subprime that we had back in 2007. We're already starting to see a few cracks along the way. HSBC, Hang Seng Bank in Hong Kong, they reported a couple of months ago that 73% of commercial real estate loans on their books are actually in the high risk category. That's one bank. Hang Seng is owned by HSBC. So that's one bank. When we think of all the other banks that are out there globally that also have exposure to these commercial real estate loans, we can see that there's a creaking, a crack appearing in those systems. And it's something that we have to be wary about. Are we going into another credit crunch? The chances are yes. Will it be exactly the same as what we had in 2007? And no, because people have learned. Banks are being tested. They're supposedly separating investment and retail banking now. but there's still a bit of a crossover there. And yes, money is going to get extremely tight. What can you do to protect yourself? Well, it's build online businesses. And if you want to learn more about how I build AI-powered online businesses, there's a link below. The other thing is any profit that you make from those businesses, I can teach you how to invest them with 0 to Millionaire. And the link to that is also below. There's a very short window for putting all your ducks in a row and preparing for what is coming our way. Subprime, sadly, is back. Not in the way that we remember it being in the past, but it is a new subprime. And as those asset-backed securities, I call them asset-backed securities, actually turn out to not have the assets behind them, we will start to see that strain go on the income streams within the global economy. So you need to work on it, guys. You need to look at where your investments are now, where your income streams are coming from. If you only have one income stream, start building multiple income streams, because that is what is going to provide for you when we go into the more difficult times. So yeah, subprime is back.